First, open the Indicators tab and select the MACD. As you can see, drawing a trend line on the histogram reveals a...
What if you had a trading tool that could literally predict the future? I know, it sounds crazy, right? But that's the huge claim we're digging into in this explainer. A system that supposedly offers surgical precision. So come on, let's pull back the curtain and see what's really going on here. And get this, the source material doesn't just say this tool is accurate. It calls it magical. It claims these little blue and purple circles can pinpoint the exact moment a market is about to turn on a dime. I mean, that's a wild statement to make. So, what's the deal? Are we looking at some kind of crystal ball for the financial markets? Or is there an actual logical method behind all this so-called magic? Let's break this thing down piece by piece.
All right, let's start with that central claim. You know, this isn't being presented as just another indicator. Oh no, this is being sold as something much closer to a prediction engine.
So the big promise is simple. A tool so sharp, so precise, that it takes all the guesswork out of finding market tops and bottoms. It's designed to give traders a massive edge by telling them exactly when they need to be paying attention. So how does this supposed prediction engine even work? Well, the first piece of this puzzle, the system's core component, is the part that generates the main alert. At the very heart of it all is this tool, the Enhanced Wave Trend Oscillator. Yeah, it's a mouthful, I know, but its job is actually pretty simple. It basically measures how fast and how tired price movements are to figure out when a trend has just gone too far, too fast.
Think of it like a rubber band. When that band gets stretched way too far in one direction, what traders call overbought, or way too far in the other, oversold, it's probably going to snap back, right? Well, this oscillator is designed to spot those exact moments, when the rubber band is stretched to its absolute limit. Okay, so let's lock this in. When this oscillator fires off one of those alerts, we're going to call that our signal. It's the first trigger, right? It's the bell that rings, telling us, hey, conditions might be perfect for a reversal. But here's the thing. A signal all by itself can just be, well, noise. The system described in our source material knows this. It doesn't rely on just one alert. It adds a second, absolutely critical layer for context. This second tool is the breaks and retests indicator. Its entire job is to automatically scan the chart and map out the market's structure. You can think of it as finding all the historical floors or ceilings where the price has bounced before. It's like a map of the market's memory. So if the oscillator is our signal, then this structural map, well, that's our confirmation. It gives us a specific location on the chart to watch. It answers the question, okay, that's a nice signal, but where is this reversal most likely to actually happen? And this is where it all just clicks together. The oscillator, our signal, gives you the timing. It's the thing that screams, hey, look now. The structural indicator, our confirmation, gives you the location. It says, and look right here, at this specific price. It's that simple. One tells you when, the other tells you where. So let's put these two pieces together. How do the signal and the confirmation actually combine to create a complete, actionable trading system? The whole process is really just a three-step dance. First, you wait. You have to be patient and wait for the oscillator to give you that signal, that overbought or oversold alert. Second, you check if that signal is happening at a key price level from your confirmation tool. And third, when both of those things line up at the same time, bam, you get what traders call a confluence setup. Which brings us full circle, right back to that big question we started with. Now that we've taken the whole thing apart, are we really looking at a tool that predicts the future? And the answer, based on how the system is actually put together, is no. It's not about magic. There are no magical circles. There's a clear mechanical process at work here. What this system is really about is a core trading concept called confluence. It's just the simple, powerful idea that when multiple, separate things all point to the same conclusion, the probability of that conclusion being right goes way, way up. So here's the bottom line. The whole strategy just combines a timing tool with a location tool. It's not trying to predict the future with 100% certainty, because that's impossible. Instead, the real goal is to filter for these high-probability moments, to stack the odds in your favor by waiting for both the right time and the right place. And that leaves us with one final thought. When you reframe the entire goal from trying to predict what's going to happen next to simply identifying moments of high probability,
Does that change how you look at any trading signal or system? It's a huge shift in perspective, and maybe, just maybe, it's the real secret behind any strategy that actually works.